Brad McMillan, Commonwealth Financial Network Chief Investment Officer. And Brad, thank you so much for being here. What do you think the market is moving on most in this jobs report? What data point is most critical?
I think what the market's going to be looking at is the yield on the 10-year U.S. Treasury. And you can actually see that in the preliminary numbers for the indices. We've seen the NASDAQ pull back a little bit more. One of the things that has really driven the recovery in last month, certainly, was the idea that the Fed is going to cut rates, that we're moving into a real slowdown. And what this jobs report tells us is not only do we not have a slowdown, in fact, to some extent, we have an acceleration. We saw monthly wage growth come in above expected. And when you look at that, you say, wow, that's not a slowdown that we can fade. But I think that's really going to hit rates, and I think it's going to hit the more interest rate sectors, such as growth.
And so, Brad, if this perhaps throws a hitch in the plans of the Fed, the market's certainly responding, and very clearly here this morning at least. What does that set up then for going into early 2024, where there have been some calls for even a first quarter cut from the Fed? Does that now kind of push this out or take that off the table entirely?
I think it does push it off. Certainly the first quarter was always a little bit optimistic for market participants. But I think bigger picture, what you've seen markets talk themselves into the idea that the Fed is going to cut rates. And we've seen this several times. The Fed says we're not going to cut rates, the market freaks out, and then everybody looks at each other and says, well, they've got to cut rates, don't they? Yeah, I think so. And then the market goes back up, and then the Fed comes out and says, no, we're not going to cut rates, and the market freaks out again. So this is just a normal cycle, but the bigger picture is we're still in a sweet spot. We're still in a soft landing. So we may see some turbulence in the short term, but longer term, this is exactly where we want to be, and that'll be good for the markets.
Okay, it sounds like I'm hearing a soft landing, and I'm hearing ever so slightly a hint of an unspoken word that we've kind of banned from our industry, which is transitory, Brad. Are you seeing evidence in this report of transitory inflation at all?
I never got away from transitory. Transitory took longer than people thought. But when you look at the way it's played out, okay, the Fed got it wrong in terms of timing, but nonetheless, we're seeing the supply chain problems pretty much go away. We're seeing energy, for example, come back down. There's a whole bunch of things that are simply not persisting as inflation. And that's exactly, again, what we want to see. Now, does that mean we're going back to 2? I don't think so. But 3 is not a bad place, but it's not where the Fed wants to see. So no cuts.
No cuts. Does that mean that we see a recession at some point from your perspective in what we're seeing in the data and how that's showing up so far?
Well, certainly we're going to see a recession at some point, Brad. But the question is when. And I think what we've done in the markets and as an industry, we've kind of phrased the question wrong. It's not when is the Fed going to cut? It's why would they cut? As long as jobs are fine, they are free to concentrate on inflation. So we're going to see rates continue at about current levels, I would say, indefinitely until we do get a recession, and a severe recession at that. But the thing is, we don't see any signs of that. The economy is chugging along. People are working. Things are going well. Why would the Fed cut? We can grow at current rates. We have grown at current rates. I think we're going to continue to grow at current rates.
Okay, Brad, so if we're going to have a Fed put, as you're talking about that, then how should investors be playing it? What is your take on what our audience of retail investors should be doing today?
I think what we have to do is just see through the noise. I do a regular thing that goes beyond the numbers. And, the numbers are important. But the bottom line is what matters is the economy is continuing to grow. Companies are continuing to grow earnings. And I mean, that's the bottom line. If you look at expectations, earnings are going to continue to grow, and that's consistent with the economy. Sit tight. Don't panic. If you're a retail investor, keep putting money in. We're going to be okay.
Where to, Brad? If I'm asking for a New Year's resolution for you, perhaps, or a top idea for 2024, where should I be putting money into the market?
I think if there's a surprise out there over a 12-month time frame, it's probably in energy. Because what we've seen is energy get beaten down. We've seen oil prices drop, and we've seen a lot of things just hitting that sector hard. But at the same time, energy is not going away. And in fact, you can continue to make a lot of money in a slowing business environment. That gives an advantage to existing players, especially the big ones. I think there may be some opportunities there.
Brad McMillan, Commonwealth Financial Network Chief Investment Officer. Thanks so much for taking the time here this morning, talking all things jobs report, plus some top picks for 2024 as well here. We love it, Brad. Thanks so much.